Hi everyone, welcome back to my channel. This is the fourth video of IGCSE Summer 2020 Paper 11 solution. If you didn't subscribe my channel yet, please subscribe and keep watching. So let's start. Question number 16. A company's financial year ended on 31st December 2019. On 1st December 2019, it paid rent $8,000. They paid the rent for 4 months ending 31st March 2020. So here the company's financial year ends on 31st December, but they paid 4 months rent. It means 3 months rent are prepaid. So what is our question? What was the opening balance on the rent account on 1st January 2020? Opening balance means that is the 3 months prepaid will be the opening balance. Prepaid, how much is the prepaid? 8,000 multiply 1 by prepaid amount means 3 months rent is prepaid. Only 1 month's rent we are taking in December financial statement. So out of 4, 3 months, 3 by 4 is equal to amount is 6,000 is the answer. So it goes to the debit or credit. Rent is an expense. Prepaid rent is the current asset. This always goes to the debit side of the rent account. So the correct answer is D, 6,000 debit. (17) Ali's financial year ends on 31st December. The balance on her books on 1st January 2020 included the following: commission receivable, rent receivable. Commission is 250 on the debit side, while rent is on the credit side. Both are the income accounts, right? So what do this balance represent? On the income account, if the balance brought down comes on the debit side, it represents outstanding. While on the income account, the balance brought down comes on the credit side, it means prepaid. So here, commission receivable is on the debit side, so we can say this is outstanding. And rent receivable, it goes on the credit side, so we can say this is prepaid. So the correct answer is commission receivable is outstanding, rent receivable is prepaid. Outstanding, prepaid. Correct answer is B. Question number 80. Joseph sells goods on credit and maintain a provision for doubtful debts. He wants to increase his provision. Amount is $250. Which journal entry records an increase in the provision for doubtful debts? Increase in provision for doubtful debts goes on the debit side of the income statement, while decrease in provision means it is treating as the income. So it put on the credit side of the income statement. Here, this is the increasing. Increasing means income statement will be debited. So the correct answer is B. A is wrong. B, income statement debit and credit customer. No, it is provision. C, income statement account debit and provision for doubtful debts. Correct answer is C. Always increase in provision for doubtful debts goes on the debit side of income statement, while decrease goes on the credit side, or we deduct. 19. Which items are deducted from gross profit when calculating the profit for the year. Gross profit we calculate in the trading section and profit we calculate in the profit and loss account section. So, which items out of this we take in the profit and loss account? Balance on provision for doubtful debts. In the profit and loss account, we enter increase or decreasing provision for doubtful debts or new provision. So, the first one is wrong. Second, carriage paid. Carriage paid is an indirect expense. Carriage paid on goods supplied is an indirect expense, while carriage paid on purchase is direct expense. Here, carriage paid on goods, carriage outward. So, this is the correct answer. Drawing made by the owner. Drawing is taking in balance sheet. If it's given in the adjustment, we take both trading and balance sheet. Drawing never enter in the profit and loss account session. So this also wrong. Second is correct. Wages paid. Yes, wages is an expense. So we enter in the profit and loss account session. So 2 and 3, 4 is the correct. A, B, C, D. D is the correct option. Next, question number 20. On 31st December 2019, John had net asset 2000 and capital 2000. On 1st January, goods costing 140 were sold on credit for 220. Here the price of the goods is 140, but they sold for 220. What is the question? What was the effect of this transaction on the statement of financial position? Net asset and capital. Asset and capital. Here, goods sold to 140. Asset decrease, 140 stock is decreasing. The same time, goods sold on credit. So, trade receivable or debtors increase 220. Then, in the capital section, 220, 140 is the cost of the goods. The business sold these goods to 220. So, what is the increased price? What is the profit? Business sales is increasing. Cost minus sales. Business get the increase. What is the increase? 220 minus 140. Increase is 80 increase in the profit. So, it will be added with the capital. Here net asset will come 80. So, asset increase 80, capital increase 80. So, the correct answer is A is wrong, decrease. B is the correct answer. Both are increasing $80. Hope all are clear with today's solution. Thanks for watching.